All right, it's Saturday afternoon, and I already did a video. It's posted. It'll be on Pfizer and on Unity software, so I can like close them out. I'm going to stop looking at those because they're equities, and I want to just focus on future markets. So that's done, and I noticed that the Bitcoin had gone down quite a bit, and I want to talk about it, and I want to start with a new chart and just do this very quickly, okay? And just think about it. I could make this, I could time out on this on a 19-minute chart. They give you 19 minutes, but just look at it and let me show you what I see. First of all, there's a big ABCD pattern, and it's a trending swing. And when the market goes lower, if I were a 135 trader, a 135 is a beautiful pattern. You really have to focus on it because it's so prevalent in the market. But on a daily chart, a 135 has a 1, 2, 3, 4, and when it gets to the down to this area, if it gets there, there will be 135 buyers in a market that had trending behavior. And then when it tests, you go long. You have to decide when and where that is with a stop below here. That's how you trade a 135 pattern. And there are variations of it, but a 135 pattern, if you Google it, is not everybody knows about it, but they should. And so the general pattern, without doing a lot of detail work, shows that the market could find buyers there. Now you can see that it's moved up from the bottom, but I want you to see this anyway, because if you want to be able to read a chart without a cheat sheet. Now, in the beginning, if you want a cheat sheet, you have it. You have all the lists you want to look for, but this all listed on the list that you want to look for, but however you say it. But you also want to just learn to look at the market, talk it out. I like to talk. If I weren't um, doing this as a video, I'd probably just talk to myself. I'm used to it. And why would I talk to myself? Because if I stop talking, I'll notice that. So if I want to keep busy, I'll talk, and I also find the words. And if I find the words, which is it gets progressively more difficult because of speech problems that I have. But if I find the words, at least I'm articulating and framing the market using the tool. So I like talking, and so I would do that. So writings, some people will tell you, like one of my mentors, Andrew Menaker, wanted me to write stuff, and it takes too much time. I can't. It's maybe that kinesthetic part of it's better, but it's very time consuming. So if normally what I do is I don't write. What I do is either dictate and then and record it. Sometimes I will follow up on. Well, the dictations I do now are basically my videos. But if I were on my own, I would do less talking, and I'd have either I take snapshots or I don't write and I don't type. I'm too busy when you're trading. I don't do it, but I always have a record and I have an opinion. And if my opinion isn't to my satisfaction because I'm not sure, there's no trade. Any case, let's look at this. And so it came to a 135 pattern. Let's look at some other things. On this market, this is the last higher low. You can count them any way you want. Low, high, higher low, higher high, higher low, higher high. When a market it goes below this, if the structure's there, I absolutely look at it. So when the market basically gets below this area and it really starts getting low, I think when I mean gets low, getting lower, this is a balance line. It's trading above and below this point here. So what is it doing? Is it trading above or below? Well, it's doing both, so it's like a support resistance line or a balance line. So it's not an easy line to deal with. But once the market starts going below here, symbolically, I think that the buyers are giving up because when the market trades to this area the first time, you expect buyers. You might get it a couple of times. So you may be able to trade this for small um, reversals, although it's quickly reversing. That's telling you when it does this and this, and then this and this, the market's kind of telling you that it's going lower. I want to point out, since I'm looking at this, because it's an interesting uh, observation, but you can't see it until it happens. I talked to you about a large 135 pattern. Well, this is a 135 pattern. You have a market that finds buyers. Let me spread it out for you. So not only so I can see it, but you can see it. So finds buyers, and that's what it does. I would be buying here if the market does this. Then what does the market do? It trades, makes a new low. And then what does it do? It'll be an extension. It doesn't look like a 1.272, but it might be. I don't know. I don't want to trade every swing, but it's really just probably just a double bottom. But a double bottom is a reversal too. 1.272 is a double bottom. It could be, and it could be just a double bottom that's not quite a 1.272. But what does it do? It goes up. It goes down sequentially and and makes new lows. And when it goes higher, it sequentially fails to make new highs. This is another 135 pattern. One, a, 1, 2, 3, 4, 5. It's also a 3-drive pattern. 1, 2, 3. So it's a reversal pattern. Now, did I do that right? 1, 3, 5 pattern. Well, yeah. Let's do that again. It is a one high, low, lower high, lower low. The 3-drive patterns here. Okay, I did the count. Here's what it is. It's a 3-drive pattern and it's a 1, 3, 5 pattern. The 3-drive pattern is the reversal. And when the market gets to here, that's the 1, 3, 5 pattern. It's a 3-drive and a 1, 3, 5. I really screwed that up for you. But what I want you to see is that the market has behavior, and 3-drive patterns are most good. Three drive patterns are probably recognized as much as Fibonacci patterns. They're very prominent. But just think about it, because the market is showing you where buyers and sellers are, and it has a certain degree of volatility and what do you want to say? Volatility and um, aesthetics. Structural patterns or swing patterns. What else do you do with this? You can see when it does this. This is about, you have to think of it. You do a fib, not a fib. Yes, you do a fib retracement. So from the top to the bottom, the market basically fails to hit the 382 of the whole swing. The market's been trending lower. It had minor potential for buyers and sellers. This would be probably the best when it's for, just look how this happened. It's expanding lower with lower lows and lower highs. And this is the best long trade. It's even better than these, because if you recognize it as a 1, 3, 5 lots of people will trade long on this. It's also, you can see that this is generally a support area. There are traders that will trade this, but when it goes higher, you want to be careful that you realize that the market's coming to a 1, 3, 5 reversal pattern. 1, 2, 3, 4. Just look at it, because all I want you to do is see things that are in the market. Later this weekend, I'm going to do a video on how to look at volatility of bars, and I'm going to start it out by saying, people tell you when you trade what you see. And my claim is most people don't know what to see, so they don't recognize it. So I'm telling you, in this market, that you had a market that's trying to break below a structural support. You have a market that has these are pattern changes. 1, 3, 5 patterns or 3-drive patterns. 1, 3, 5 on top, 3-drive at the bottom, and traders traded. Both buyers and sellers scalped this market. Some of them were 3-drive traders, and some of them were 1, 3, 5 traders. different directions. So in any case, and then when it goes higher, there will be people that see that the market's correcting to a 382, not taking out structure. In fact, you could short this if you had all this evidence with a stop up here or even here, and that wouldn't be bad. It's expensive because even little ranges of Bitcoin are very expensive, but you have structure. This is minor structure that could support the market moving lower at the 382. Be careful of support. You know what I mean? It allows you to short because you have minor structure. You want to trade where your friends are. If this is a seller, your friends, your sellers are there, and so you take your trade here, and hopefully your friends will protect you, and the market goes lower. The next thing you do is you look at the market doing something like this. This was supposed to be a fast video. I'm sorry about it, but I didn't I didn't think about these patterns in here that I just described. So when the market goes lower, you can project that the market can get to this area, which is a support area, by looking at the A, B, C, D pattern. I want to show you how you can project. How do you see the market? Well, you see the market depending on how and when you use your tools. So I would see the market as possibly going lower, but also when it gets to the tool, I see the market as a reversal pattern, which is also a double bottom. So it's a reversal pattern here. I also see in this market is that when the market's doing I can see this, and when I see that, I it I this makes me look for measured moves. So I don't have to draw it, but if it's the only thing I have, I might do it. If I miss it, it doesn't. If I make money on the trade or I stay out of trouble because I was supposed to stay out of the trade, I'm happy. I don't have to have everything on the chart. But in any case, we look at this. We go from here. It's a measured move. Actually, oh my gosh. Actually, this looks a little bit less than a measured move. I think this is it though. I'm having a visual crisis here. So I'm not sure what to tell you in real time as I'm ready to embarrass myself, but Eddie, this is it. So that's enough of a measured move. This looked like it was just a little too much. So why am I doing this? Because I think the markets trade to these algorithms, the algorithms of a market that breaks below a support area. It'll find buyers initially, but if the market has certain patterns, ABCD patterns or 135 patterns, you'll be able to trade it. When the market retests to 382, these are all algorithms in the market. Mathematically, these kinds of things can be computerized for faster trading and other things, and we're looking at patterns. And it's repeatable. When the market does this, basically it's coming to an area where the market gapped. I'm going to put it here because I know it fits. I'll put it here. Let me put it to you this way. If the market comes to this area and it looks like this, I'll always have it perfectly. Why? Because I'll play with it so that it's perfect. And if it gaps above this bar, it works perfectly. So if it did a little bit differently, I'm going to change it. But in the long run, it's a market that finally trended lower, fulfills patterns, reversal patterns. Measured moves are reversal patterns. A, B, C, D are reversal patterns. And I'm going to be a buyer. If this happened in real time, I would be a buyer. In real time on a weekend, I can't trade this. The Bitcoin, I never trade Bitcoin, but I can't trade it on the weekend because I think it's closed. I know it's closed. On the futures market, Bitcoin's closed on the weekend, so there's no trading. But if I were Forex, um, what could I say? You could take a long trade on that. In any case, I thought you should see this. You should also do one other thing on this. You need to look at the whole swing. I'm going to make it a weekly chart so I can get done with this. And so on this market, I would be looking, and look how simple that looks. I mean, this market uh, it's amazing. To me, the bigger time frames are elegant in the way they show the behavior. See, when it does this, there's no real support. And what did the market do? It just tested to this area here. That's not a surprise. You know what you do? You do the 382 of it. If you want to know how you take a profit on this, first of all, I'll show you that first. Just do another 382. If the market goes from the bottom, I'm sorry, whoops, hold on. The market goes from the top to the bottom. If your first target could be a 382, it's not quite there. We don't know if it was there. It depends. You know, I just saw this. I don't know how it traded in real time, but I'm not going to go to smaller time frames to figure out exactly what it did here. But this is the last thing I want to do. First of all, I want to take this off because I want you to see the retracement, and then we're done. And oh, I did it the wrong way. Sorry about that. Let's take that off. Let's take it off. Oh, I'm getting a little tired, so I'm working slow. Here, let's do this. Let me sit forward. So we look at it from the bottom to the top. The market trades to the 618, and you see all the stuff in here is where the support is, and the 618 if I use the retracement, and the rest of it. So here's the deal. This is what the market looks like, and my guess is it'll trade higher. If the market starts making new highs, I have a choice of drawing. Well, I would, let me see something here. I'm going to regret this. If I think it's going to go higher to a new high, this is what I would do. I would take from the bottom to the top to this area if it's a reversal area, and I would look for the market if it makes a new high to get to this area. The other thing I could do is look at the market as it goes higher from here to here. I would look at the extensions as potential reversal areas. I have two ways of doing it, the big ABCD pattern or the extension, and I would evaluate a breakout higher to go to these targets. These are targets that have never been hit. I could use bigger swings on it on other charts, but on this chart, the way I framed it, if the market goes above here, I'm telling you, because if the markets go higher, we've done this in several markets in the last couple weeks. So in equities markets, and I believe in one of we have done it on lumber on one of the futures markets. I'm projecting where the market will go if it goes higher, and it starts down here somewhere, and this is my target somewhere, and we'll find it, and we'll look at the price action and the rest of it. We're out of time.